Oh, why howdy there, folks. I'm sure, as many of you are doing, I'm certainly watching for these election results to roll in. That's why we've been a little bit tardy. A lot going on lately. Come on. So we're gonna be, in the meantime, talking about Wayfair earnings that reported this morning. Still plenty of stuff as far as the stock market's concerned. This is one of the probably biggest years for swings potentially. We'll see what happens here. So I'm excited. But we're getting into Wayfair today. Things up 7% because of those earnings, and up even a little bit further after hours. So pretty crazy stuff. The market went up 2% by itself, but obviously I'm assuming Wayfair's earnings had something to do with this price movement. We'll take a look. So needless to say, wowee! Quarter three non-GAAP EPS of $2.30 beats by $1.46, and GAAP EPS of $1.67 beats by $1.52. That is what I would call a top line smasher. I mean, that's a beat on profitability by a mega extent, and I think it's something you probably would have expected because you saw numbers similar, just like Etsy put up. I mean, these are similar numbers as far as the spectacularness of the beats. And a revenue of $3.84 billion, up 66% year over year, beats by $170 million. Not as big of a beat necessarily, but you do see overall, I mean, up 66% year over year is a massive revenue boost. The number of active customers in direct retail business increased 50.9% year over year to 28.8 million as of September 30th. So we'll look at that. Obviously, the stock was up as a result of that. Then it fell back down again, and now it's back up again. Weird stuff. Let's get into this finer details, and we have slides to go over, and then we also just have we'll go over the balance sheet as we love to do, baby. So orders grew 72.8%. Active customers up 50.9%. Pretty crazy. U.S. revenue was up 66.5% to 1.3 billion, and international was up 66.7%. So actually really consistent as far as that, both U.S. and international. Pretty crazy. Average order value was 243 versus 252 of a year ago. Not a shocker at all. I think one thing you need to notice as far as Wayfair is concerned is that this increase in customers, it's just natural that you see an average order value decline. It's just how it's going to go. You can see it on any service. They're even talking about Walmart pickup, their online pickup. The more users they have, you're going to have a lot more people than just, by the odds of it, that order one or two items as opposed to your regulars that typically will order the same products, and usually it's a larger ticket value. So when you get new people, when they're trying it out, they'll typically order just one or two items, and that's why that average order value is down. Just so you know, and it'll continue to fall most likely if they keep increasing customers at this rate. Repeat customers place 72% of all orders. Pretty crazy. Gross profit was 29.9% of revenue at $1.1 billion. Adjusted EBITDA came in at $371 million versus the consensus of $192. Very big beat there. And as far as the CEO, Niraj Shah, says, I said that right, by the way. What can I say? Pretty impressive. Category momentum is vibrant. Demand is moving online at an accelerated pace. Obviously, as I mentioned, this is a perfect environment for them because it's pushing people into the future quicker than we were previously. We're going on a big, fast pace as is. I don't know what I'm saying right now, but now it's only progressing quicker. And we expect the home to be even more important than usual when it comes to celebrating the holidays this year, says the CEO, as we saw. Crazy stuff. Let's look at these slides real quick and see what they have to offer for me. So obviously the brief histories we talked about. These are some of the slides that they mentioned pretty well consistently here. These are the same ones they do year over year for the most part, but definitely there is some important stuff to talk. They talk about an addressable market. So just in the U.S., they talk about potentially by 2029, $411 billion being up for sale. As far as total spent, and offline being 253, and you see a decline overall from really overall from this year on to 2029 is what they're projecting, and online is going to be growing at a massive rate. annualized growth rate of around 15%, and overall spend increasing a little bit over 3%. So, obviously, penetrating different markets there. 13% in home goods, 30% in apparel, consumer electronics 43%, and demographic tends to be right in the middle of 30, 35, and 65. So typically median household income of 75,000. So, and 45% of sales are between people aged 31 and 50. So 40-year-olds, you're the peak demographic for these guys, okay? Within the home category, online growing, they see home category growing quite significantly. Quite significantly as far as home is concerned. So, pretty crazy to see. Pretty crazy to see. So, they mentioned here obviously the problems with the home category, which is going to be stuff like furniture and stuff like that. And obviously, one of the main problems is people not being able to touch or feel the product. For sure, they can't visualize it in their room because they can't see it. So home it's typically browsed and they don't search for it. That's the issue, is people just stumbling upon it. When you're at a furniture place, you get to walk the entire sales floor and see all these different things. Instead, you'd have to search for it if you're talking about a like Wayfair. And obviously, delivery is a big thing to do. Delivery speed can hurt people a lot because you're talking about if you have to wait a week for a piece of furniture, people might not be into that. And obviously, they're trying to do their best to make that a more a good thing. Here they go into issues and how they resolve them. Obviously, stuff like customer reviews help people give confidence. They give you the ability to customize it in your space, which is pretty crazy. 3D view of your room, or a 3D view of it in a room is pretty crazy. So you can go to scale with furniture perfectly with a 3D model of your room. Is pretty crazy. It is crazy to see. And obviously they give recommendations so you can browse furniture a little bit easier. Definitely big. They have some great brands, and obviously delivery. They talk about the great delivery they typically do. They obviously have a lot of different brands here. Your Wayfair brands more for the low end and the mass market, whereas you definitely have some more higher brands that they sell, like Perigold as well. So they got a lot of different brands here that they sell, that work for each different demographic that they sell. So as far as their Wayfair brand as a whole, 87% U.S. aided brand awareness since the launch. Obviously, people know what Wayfair is. In the U.S. and Canada, Wayfair is the number one place consumers think to shop for their home online. Yeah, Wayfair, you got just what I need. That's the slogan, boys. That's the slogan. Nothing super crazy as far as that's concerned. Strategic priorities, again, focusing on logistics and being able to deliver the stuff to customers. Pretty crazy. Supply chain is massive for this. And home products are prone to damage, so they need to get a strategic plan in place. Obviously, they don't want anyone getting furniture delivered that's damaged. Obviously, highly damageable. You talk about cloth, it could be easily ripped, and that just creates a bad customer experience, and you won't keep the people. So, as far as the slides, that's mostly what I want to cover, because most of it's just really explaining the business to the most part. I care more about the numbers. And really, we saw those growth numbers and how crazy they are, and I think it should be pretty crazy to see that continue. We'll look at the balance sheet too. They give me a 9 months comparison, which I do like. Cash and cash equivalents of $2.4 billion versus $582 million. Pretty big improvement there. Total current assets of $3 billion versus $1.3 billion. Big growth. I'd hope to see total liabilities hopefully not grow by that much. Total assets in general 4.5 versus 2.9. Good improvement there. Total current liabilities is at 2.2 versus 1.6. So you see they grew assets by more than that, and total liabilities in general of 6 billion versus 3.8. You know, they definitely overall grew liabilities more than they grew assets, so that is a concern. I do need to mention that there's a total stockholder deficit now that's increasing, 1.4 billion versus 944 million. It's concerning, right? I don't like the balance sheet of this company. Now, I'm not saying they're not going to make it. It's been a challenging year. But if we want to talk about them, the potential to really grow in the future as far as that, we'll figure that out as far as that's concerned. I don't know necessarily what to think there. I don't like the stock at these values. I really don't. Very good for the EP or the PE ratio potentially with this, but I really don't like the value of it just because of the treacherous state of that balance sheet. It's a sketchy one. I mean, you're talking about accumulating deficit when they're blooming the business, and if they keep blooming business, how much is this balance sheet just gonna, blow up? I mean, how much are we gonna be adding to this deficit? That's what's concerning to me. So, that's what I got for you. I'm not buying this thing, but if you do, it's up to you. Have a good one.